Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be Wednesday, the 4th of June, 2025. So let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into the intraday technical outlook on those broad-based cross asset classes that we cover on a daily basis, the major dollar pair, the major stock indices, the two key commodities market, which is Gold XAU/USD and West Texas crude oil. Let's have a quick recap what has taken shape yesterday in terms of economic data release, news flow, and as well as their impact on the respective intraday movement on the these broad-based cross asset classes. Pardon me. So let's look at yesterday's key economic data release first. Will be more pertaining to the European side of the story, which is the ECB aggregate flash preliminary PM inflation data. All right, so at 5 p.m. Singapore time, it was a release of the aggregate Eurozone, or i.e. the Euro area inflation rate data. So this is a preliminary figure, which is a flash figure, not finalized in the month of May, but that potentially give us a gauge of the inflationary trend in the Eurozone, which is on the path of disinflation rather than inflation versus what we could see in the US. All right, so the headline inflation number that includes those volatile items like energy and food dip down further to below ECB target of 2%. All right, so market is expecting at 2%. It came down way below what market is expecting and also way below the previous month figure of April, which is 2.2. So it came in at 1.9%. So if you strip off those volatile items, it's also showing signs of a disinflation as well. That means inflationary rate decelerating on the downside, where the core inflation rate year on year came in at 2.3%, below what market is expecting at 2.5%, and also below April's print of 2.7%. So if you look at the core inflation rate, pardon me, over here, okay, give me a couple of seconds for the chart to load up. Give me a minute. It seems to me that there is some problem with the audio. Test. One second. I'm not sure whether the audio is working. Okay, let me do a check again. Mic test 1 2 3. Testing 1 2 3. Test. Okay, let's see. Okay, let me speak. So I hope that things are doing fine on the audio side. So where we are, yeah, I'm just trying to share with you the trend of the core inflation rate in Eurozone, which is on the path of the inflationary trend, right? So this is the core inflation rate over here, the core Eurozone inflation rate. All right, so this core Eurozone inflation rate dipped down in the month of May. So if you look at the 10-year trend over here, right, so it's the lowest rate since October 2021. So that's close to about what, 3.5 year low. All right, so what I could see is that it's clearly on the path of disinflation, that means inflationary trend decelerating on the downside, that also potentially supports another 25 basis point cut this coming Thursday by the ECB. So we touch more about that when we hit tomorrow's daily dose insights. All right. So what its impact on the FX market is came in with our expectation. So still recall that yesterday in my daily dose, I do expect a dollar strength corrective rebound coming back into the picture, which indeed it takes hold. So if you look at the dollar index yesterday, it staged that bounce over here, right? That minor bounce of 0.5% or 0.6%, and this bounce is being reflected by that pullback in the euro dollar yesterday, right? So the euro dollar shared 0.6%, all right? So that is kind of being, firstly, technically, there were some signs on those short-term intraday technical elements that are highlighted on the euro dollar, the sterling dollar, and even the dollar yen. And with that economic data coming out from Eurozone, which is the Eurozone flash inflation, core inflation trend is showing the path of deceleration. That means, i.e., giving more ammunition for ECB to be much more dovish this coming Thursday. So we have technical factors and economic data factors supporting that corrective rebound in the US dollar yesterday. But as a trader, what I'm concerned right now is going forward, what are the potential trend buyers for today in the FX market, since the rebound has already been made in the US dollar against the major currency. I'll share more in my second segment of today's daily dose. All right, and also over to the US stock market. So the US stock market continues to ignore negative news flow. So what I mean by negative news flow? Yesterday we have the OECD. So OECD is a group of we call it a body of comprises of, we call it major developed nations, and this OECD body is very similar like IMF. They come up with forecasts of major developed economies, and also they do with some research paper as well. So yesterday OECD downgraded global growth for the second time this year. All right, so so OECD has slashed its global economic growth forecast due to that erratic and rather a haphazard way of Donald Trump's trade policy, citing the impact of uncertainty and tariffs and confidence, and citing the impact of tariffs, uncertainty on confidence and investment. So what I could see over here is that they reduce it by 0.2 percentage point or 2 basis point. Earlier was a 3.1%. They slashed it down to 2.9%, and also they further downgraded the US growth to 1.6%, and also across the major developed nation as well, they continues to actually see a downside revision. And even the forecast for 2026 global growth was also inched down slightly lower by 1 basis point or 0.1 percentage point to 2.9%. So despite this this particular negative news flow on OECD has towards the lackluster earnings, lackluster global economic growth that could potentially impact earnings ability or earnings capability of US corporation. That means, i.e., US corporation going forward in the next few quarters, their earnings may get face certain headwind. That means potentially earnings growth slow down due to this slowdown in global economic growth. Market choose to ignore such a gloomy forecast by OECD towards the lackluster global growth prospects. However, market is now betting that Trump and China presidency will hold a one-to-one phone call this week, as proclaimed by the White House on Monday, to diffuse whatever current tension between these two superpower. So what we could see over here is that the US stock market continues to power up on the upside. Yesterday, we do have a neutrality stance on the Dow Jones Industrial Average, which is the Wall Street 30 as being portrayed in our our platform. So the US Wall Street 30, which represent the Dow Jones Industrial Average, broke above our neutrality range. The upper neutrality limit will be at for the 42,400 level, which is so close to the 200-day moving average. It did that intraday bullish breakout and closed in the green by the end of yesterday US session at 0.5%. And what's stunning over here is that the Russell 2000 continue outperform by 1.59%, despite the fact that the US growth is being downgraded. US economic growth is being downgraded further by OECD. So what do I mean by that? Yeah, so US growth is being downgraded further by 0.6 percentage point to negative 1.6% in 2025. All right, so markets, like I say, choose to ignore all this gloomy forecast and choose to focus instead of that potential US President Trump and China President Xi one-to-one phone call coming this week. All right, so the Russell 2000 being the proxy of, a very close proxy of the health of the US economy. Why? Because given the fact that Russell 2000 comprises of small caps company that has a significant revenue flow dependent on the US economy, rather than mega cap stocks where they have revenue flows coming in from a global perspective. And the Nasdaq 100 also continues to power up as well, being the second top performer, up 0.8%. The SPX up 0.6%. So if you look at the heat map of the S&P 500, for sure, NVIDIA was the sterling performer that is actually pulling up the strength of the Nasdaq 100, given that NVIDIA itself is the third biggest weightage stock in the Nasdaq 100. Right, the only underperformer among the 7 mega cap stocks in the S&P 500 was two of them, Google and Meta, which is Facebook. Google down negative 1.7%, Meta down negative 0.6%. All right, over here. So later I'll touch on the intraday technical outlook on the major US stock indices. So we got to respect the current positive animal spirits that it has on it, at least on a short-term perspective. All right, and also what's interesting over here is that while we are speaking, the dollar strength that was seen yesterday starts to get dissipated in today's Asia session over here. All right, what we could see. So if you go to the one-day rolling performance, what you could see is that the dollars starts to actually inch downwards after the push up that was seen yesterday. So little very interesting over here is that the dollar has really reached some signs of inflection level yesterday after that corrective rebound. So later I'll touch on it when I covered my second segment of today's daily dose. So let me touch on gold price. So we know that gold price has the indirect tight correlation with the movement of the dollar. That means, what do I mean by this? That means if dollar goes up, gold price tends to come down, and if dollars come down, gold price tends to go up. So if you look at the gold price yesterday over here, all right, let me expand my screen. Okay, so gold yesterday came down by negative 0.8%, but managed to hold above a short-term support at 3,330 level thereabout. And yesterday I also do mention in my second segment of yesterday daily dose that watch out for that corrective pullback. So this corrective pullback is more like a pause after the very strong bullish Marabuzu candle that was printed on Monday, 2nd of June. So where do we expect gold heading off from here? I will cover also later in the intraday technical outlook for gold. Very interesting is that since that pullback has managed to hit exactly at our first support level that I mentioned yesterday, which is around that 3,330 level. All right, and interestingly, oil prices continues to remain rather steady, trading around at the 60. Give me a minute now. $64 per barrel. So later I'll touch about oil prices as well. So now with that, potentially sum up this first segment of today's daily dose. So now let me touch on the second segment, which is the intraday technical outlook. All right. So now with that, just to make sure that everything is good. All right, let me expand my screen. All right, here we go. So let us start with the euro dollar first. Okay, so on the euro dollar, yesterday we do expect a minor pullback over here. So the minor pullback actually, excuse me, the minor pullback hit exactly our short-term pivotal support area or support level at around the 113.75 area, 113.75 area. And what's interesting over here is that the hourly RSI right now has starts to slope upwards over here. Okay, so slope upwards. So what I'm gonna do is I got to give a bit of buffer. All right, using this congestion area here. Okay, give a bit of access at 113.45. Okay, let me amend the pivotal support level to give a bit of buffer. Okay, 113.75 slash 113.45. So this will be my short-term pivotal support zone for today. So I will still maintain that intraday trend bullish bias. First resistance level to watch out for will be this brother level here. Yes, this one. Okay, given previously there was some form of support level and on a minor scale on 3rd of June, and as well as yesterday's start of the 2 hour before the start of the European session, before that sell off take shape, and this sell off take shape was being amplified by that weaker than expected aggregate eurozone key inflation data. All right, it's at 114.19. Okay, so let's see where I can input the text. Okay, give me a couple of seconds for it to. Okay, 1.114.19. Okay, so let me repeat everything. Key pivotal support level to watch out for will be at 113.75 slash 113.45, a bit of buffer on downside. RSI has now starts to show signs of bullish momentum revival, given we start to see a series of higher low that's being seen on the hourly RSI. First intermediate resistance to watch for today on the intraday basis, 114.19. A breakout above 114.19 may see 114.80 coming in next. That's for the euro dollar. Only a breakdown below, a bearish breakdown with an hourly close below 113.45, that would invalidate or negate today's intraday trend bullish bias to see it dipping down below to retest the rising 20-day moving average at 130 figure, pardon me, slash one. Okay, give me 113 figure level. So this is a typo error. 113 figure level slash 1.1270. All right, so that's for the euro dollar. Next up will be the sterling dollar. So the sterling dollar continues to remain trapped in a sideways range between our first support level at 134.80 and the first resistance at 135.55. So faring much better than the euro dollar yesterday, because the dip is less pronounced on the sterling dollar side of the story. And if you look at the sterling dollar hourly RSI, also starts to shape a higher low over here and starts to inch back up above the 50 level mark, so indicating some form of bullish momentum coming back into the sterling dollar. So given that it has not broken up above our first resistance, which is at 135.55, that was preventing the bulls from breaking out since this Monday itself. Over here, we will not want to tighten my short-term pivotal support to be at 134.80, so I should remain it the same as yesterday at 134.20, unless we have an hourly bullish breakout. If hourly close above it at 135.55 during the European session, then that I could be more confident to shift the pivotal support upwards towards 134.80. So still no change, maintaining our intraday trend bullish buyer stance on the sterling dollar using 134.20 short-term pivotal support for now. Above 135.55 exposes 131.3640 next. Only a bullish breakdown and hourly close below 134.20, which will correspond to the 20-day moving average, the rising 20-day moving average as well. We would then negate that intraday trend bullish bias to kickstart a minor corrective decline sequence, exposing the next near-term support level at 133.70, followed by 133.10 next. Next up will be the Asia Pacific currency against the dollar, starting with the Aussie dollar. So the Aussie dollar yesterday managed to survive at the short-term pivotal support level. We saw at the 20-day moving average as well, at the 200-day moving average as well, coming very close to the 20-day moving average as well at 64.55 over here. So no change, using 64.55 as my short-term pivotal support level. We will do have this bullish stance, but it's within this sideways range over here. So what I could see is that the Aussie dollar has been trading in this tight sideways range since 24th of April. All right, this sideways range over here. So now we are just expecting it to bounce back towards the upper limit of this sideways range. So 64.55, no change, short-term pivotal support level. For today, I will do have a lower intraday resistance, which is 65 figure level. So that is Monday high. Let me put it in writing for you guys. $65 level. All right. So 65 figure level will be my first resistance level to watch. Above it, see 65.37/65.45 next. So only a bearish breakdown for hourly close below 64.55 that would negate today's bullish bias for a potential push up towards the upper limit of the sideways range, and instead see the Aussie dollar drifting down towards the lower limit of this sideways range. Next support level to watch in near term, 64.07. A breakdown below it sees the sideways range key support level coming in at 63.65/63.50. We also correspond to the 50-day moving average as well. Lastly will be the dollar yen. So dollar yen yesterday, we do have a bullish bias, but this bullish bias is more of a corrective rebound. Price action bounce as expected, hit our resistance level, which is at the 144.25, 144.80. So 144.80 now confluence with the 20-day moving average and very closely with the 50-day moving average, making it indeed a key inflection level to watch out for today. So what's interesting is that after that bounce took shape, the hourly RSI has now shaped a bearish divergence. Okay, so what you see that price action hit higher high, but RSI slope peak is sloping downwards and is now exited from the overbought region after this bearish divergence that has taken shape. So indicating that yesterday's upside momentum has started to wane off or ease off. With that, since it's already made our corrective rebound resistance level, we will now be flipping back to a intraday trend bearish bias on the dollar yen using 144.80 as my short-term pivotal resistance level. First support level to watch in today's trend bearish bias will be at the 143.12 level, 3.12. Okay, which is this minor congestion area over here. Yesterday, 143.12. Below 143.12 may see a retest of that key 27th of May swing low that managed to survive on yesterday at the start of the Asia session at 142.35. only a push up and a bullish breakout with an hourly close above 14480 that would negate today's intraday trend bearish bias to see a further squeeze up to revisit the minor swing high area of 29th of May and as well as 16th of May, acting as the next intermediate resistance at 14610. So, i.e., given the technical elements that is portraying out at the dollar yen right now, indicating that yesterday's corrective rebound may have hit a inflection level with bearish momentum reading, we will flip back to a intraday trend bearish bias for the dollar yen using 144.80 as my short-term pivotal resistance level. All right, so that's cover the intraday technical outlook segment for the FX market. So now let us move our attention towards the major stock indices, starting with the Hong Kong 33. So still recall Hong Kong 33, yesterday we will have a bullish bias stance because of that bullish reversal right at the 50-day moving average, and price action reintegrate back above the 20-day moving average. And in today's Asia session, it managed to clear above our first resistance level that we highlighted yesterday at 23,600 level. So with the clearance of the 23,600 level, we will be tightening our short-term pivotal support level towards the 20-day moving average and also the former congestion area over here that was printed on last Thursday and Friday at 23,330. So using a tightened short-term pivotal support level for the Hong Kong 33 that is representing the Hang Seng Index 23,330, we will maintain our intraday trend bullish bias stance. Next resistance level to watch on the near term, which is on the intraday basis, will be at 23,970 / 24,040. Above it may see the next resistance coming in at 24,490 next. So what's 24,490 is the upper limit of this minor ascending channel that or medium term ascending channel that I drew from the low of 16th of April. The upper the 0.382 Fibo extension taken down from the low of 9th of April. Only a bearish breakdown with an hourly close below 23,330 that would invalidate today's intraday trend bullish bias to kickstart another round of a choppy corrective decline sequence, exposing 23,070 below 23,070 may see a deeper pullback to revisit the 50-day moving average that also confluencing with the 2nd of June swing low area at 22,680. So i.e. maintaining our intraday trend bullish bias on the Hong Kong 33 using 23,330 tighten short-term pivotal support. Next up, Japan 225 representing the Nikkei 225. So Japan 225 continues to slowly, gently slope upwards by seeing a series of higher low and also being represented by a higher low that is inching upwards with a steeper gradient versus the gradient that was seen on Monday and Tuesday. So this indication of the latest observation on the hourly RSI represents a build-up in bullish momentum, at least from a short-term perspective, given that it hasn't hit the overbought level yet, which is 70 and above. And with that, given that it hasn't broken above our first resistance level, that also confluence with the key 200-day moving average at 37,980. We'll still be using 37,270 as my short-term pivotal support level. Next resistance level to watch after 37,980 will be at 38,460, which is the minor swing high of 29th of May. Only a bearish breakdown and an hourly close below 37,270 that would invalidate today's intraday trend bullish bias to expose the next near-term support level at 36,930. Below it, revisit the 23rd of May minor V-shaped recovery low at 36,450. All right, unless during the European session we could have a bullish breakout and hourly close above 37,980, and which is also confluencing with the key 200-day moving average, then I could raise my short-term pivotal support level from 37,270 to this congestion area here, which is 37,000 550, all right, which is also very close to the rising 20-day moving average. So that's for the Japan 225. Next up will be the European stock market, the German 30, representing the German DAX. So the German 30 managed to actually inch up higher. Now it's testing our first resistance level, which is the trigger level, the upside trigger level that I mentioned yesterday, 24,125. So unless we have a hourly close and a bullish breakout in the European session above 20 above 24,125, then I would tighten the short-term pivotal support level to 23,820, which is the rising 20-day moving average. So for now, pivotal support still remains the same as of yesterday, which is the gap up support level that was seen on 25th of May at 23,675. All right, next resistance level to watch above 24,125 will be at 24,440, 24,440 slash 24,560. Next, only an hourly close and a bearish breakdown below 23,675 would invalidate today's intraday trend bullish bias to see another round of choppy corrective decline to retest the minor V-shaped recovery low of 23rd of May at 23,380 next. So in a nutshell, still using 23,675 as my short-term pivotal support level. I repeat, as 23,675 as my short-term pivotal support level for the Germany 30 to maintain our intraday trend bullish bias. And I'll be watching very closely the 24,125 upside trigger level for today. Next up will be the major US stock indices, starting with the US Wall Street 30, representing the Dow Jones Industrial Average. So the Dow Jones Industrial Average managed to stage a breakout above the 42,440 upper limit of the neutrality range over here. So with that, it retest the 200-day moving average, and right now it's attempting to do a minor pullback again over here. So given yesterday's strong intraday rally and also the hourly RSI hitting the overbought level, and right now he has already exited from the overbought level without any bearish divergence. So there's no bearish divergence yesterday. Price action on the RSI shape, price movement of the hourly RSI move in line with the price movement of the raw price movement of the US Wall Street 30, higher high, higher high. So given this exit from the overbought level, that only could potentially represent a minor pullback instead rather than a minor bearish reversal. So with that, first minor pullback support level to watch out for will be at potentially this level here. All right, at 42,310. So I'll be using a slightly lower level than 42,310 just in case of any whipsaw to sync it to the rising 20-day moving average at 42,100. So 42,100 will be my short-term pivotal support level. We'll be flipping back to a intraday trend bullish bias on the US Wall Street 30, notwithstanding that we could see a minor pullback taking shape first towards 42,310 before another potential upleg resurface. Next resistance level to watch will be at the 42,870 slash 43,085 zone. However, only a price action breakdown and hourly close below 42,100 that would invalidate today's intraday trend bullish bias to see another round of choppy corrective price movement resurfacing back into the US Wall Street 30 on a minor time frame scale to revisit 41,850 support level. So this 41,850 support level is rather key because this managed to help previous minor sell-off since last Friday and also confluence with the medium-term ascending channel support that I drew from the low of 7th of April, i.e. so that will be the US Wall Street 30 flipping to a intraday trend bullish bias stance using 42,100 as my short-term pivotal support. Lastly will be the Nasdaq 100. So the Nasdaq 100 yesterday we do have a bearish bias for a minor pullback to retest the rising 20-day moving average at this 21,180 slash 21,015. But however, price action didn't move down, but instead starts to stage a bullish breakout above the 21,500 short-term pivotal resistance that we have yesterday. So we got to respect this short-term intraday bullish price movement and that has potentially reduced the odds of any chance of a minor pullback to revisit the rising 20-day moving average. So with that, we'll be flipping back to a intraday trend bullish buyer stance. Very similar to the US Wall Street 30 as well. There could be a risk of a minor pullback taking shape. So why do I say that? Because the RSI had hit the overbought level yesterday, and now it has exited from the overbought level. But while it exit from the overbought level, it didn't shape a bearish divergence. It shaped a higher high that is moving in line with the price section of the raw price movement of the Nasdaq 100. So indicating more of a minor pullback rather than the start of a minor bearish reversal. So minor pullback support level to watch out for later for today will be at 21,500, maximum 21,330 over here. So what's 21,330? So what I did is it's also the congestion area of last Friday. And also if you're given the look of this last 5-wave movement up over here, 1, 2, 3, 4, 5 from last Friday sell off low. If you do the Fibo retracement, that also coincide of the golden ratio of 61.8%. Okay, so using 21,330 short-term pivotal support level, notwithstanding that there could be a risk of a minor pullback taking shape first before another bullish movement unfold on the Nasdaq 100. Flipping to a intraday trend bullish bias for today, resistance level to watch in the first step, 21,750. A breakout above it may see it potentially exposing the next resistance level at 22,200 / 22,250, which is the all-time high area. Only a bearish breakdown and an hourly close below 21,330, then that would see the risk of revisiting the 20-day moving average again at 21,180 / 015, a breakdown below 21,015 that will see a deeper minor corrective pullback to revisit the minor swing low of 12th of May and 23rd of May at 20,690, just slightly above the 20-day to 200-day moving average. Pardon me. All right, so next up, we will cover the commodities market, starting with the gold XAU / USD. So for gold XAU / USD, yesterday we were mindful of that corrective pullback. So that corrective pullback almost hit that 3,330 level over here before shaping a rebound in today's Asia session. So still no change. I don't want to tighten my short-term pivotal support to this 3,330. I still maintain it at the 20-day moving average. That also confluence with that former bullish flag resistance, minor bullish flag resistance, which is dotted gray line here, now also turns into a pullback support, synchronizing exactly at the 20-day moving average, which is at 3,300. So using 3,300 as my short-term pivotal support level, no change. Still maintaining that intraday trend bullish bias for the start of a potential new up leg after that pullback has taken shape yesterday for gold XAU / USD. First resistance level to watch will be the minor swing high area of 8th of May and 7th of May at 34.17, 34.35. We also confluence with the 0.764 Fibo extension on the upside, taken from the low of 15th of May. Only a bearish breakdown below 3,300 level with hourly close below it, that would indicate a invalidation of today's intraday trend bullish bias to kickstart a minor corrective pullback scenario to revisit the rising 50-day moving average, and as well as the retest on the 29th of May minor swing low, which is at 32.52 level. Right, so that's for gold XAU / USD, still maintaining that intraday trend bullish bias using 3,300, which is 3,300 as my short-term pivotal support level. Next up will be the West Texas crude oil. So West Texas crude oil continues to trade higher yesterday, but what's interesting over here is that it still can't break above our short-term pivotal resistance that we have since last week at 64.06 over here. So what's interesting over here is that upon the second retest of the 64.06, after the first retest that was seen on Monday, the hourly RSI now has shaped a bearish divergence. Okay, what do I mean by this? Similar high on the raw price section of the West Texas crude oil, but the hourly RSI is sloping downwards. All right, so this represents a start or a build-up of bearish momentum in the West Texas crude oil market on an hourly basis. So with that, 64.06 for sure will be indeed our inflection level to watch. Still remains it as my short-term pivotal resistance level. First support level to look out for today will be yesterday's we call it European session low. Okay, on the intraday basis, that will be at 62.74. Let me put it in writing. 62.74. Oops. Okay, give it a couple of seconds for it to actually get working for the text. Okay, good. 62.74. Okay, a breakdown below 62.74 may expose the gap support level, the gap up support level that is being seen on this Monday at 61.85. We also confluence with the 20-day moving average. All right. So, however, hourly close and a bullish breakout above it, a bullish breakout for hourly close above 64.06, that will invalidate today's intraday trend bearish bias within this sideways range configuration to see a squeeze up to retest the next intermediate resistance level at 65.40, which is the minor swing high area of 23rd of April. So i.e. no change, still using that 64.06 as my short-term pivotal resistance, maintain that intraday trend bearish bias within a sideways range configuration. Near-term support level to watch for today, 62.75, followed by 61.85, which confluence with the 20-day moving average for West Texas oil. So that sum up the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? All right, so today, Wednesday over here. So during the European session, we have a slew of PMI data, but that is the finalized figure, so that shouldn't be of a major changer, given that the flash figure was released about a week or so ago over here. So rather a quiet European session thereafter. So heading into the US session, we do have one Federal Reserve official speaking, Fed Bostic speech at 8:30 p.m. Singapore time. And for those who are watching the dollar Canada rate and the CAD cross rates, we have Bank of Canada interest rate decision. So market participants are expecting it to be a second, we call it a consecutive meeting for BOC to maintain its benchmark policy rate at 2.75%. So that will be out at 9:45 p.m. Singapore time. Then thereafter, one key tier one important data up from US will be at 10 p.m. ISM services PMI. So this is much more important than ISM manufacturing PMI, which was out on Monday, because three quarter of US economic growth are driven by services activity, and the services PMI still are hovering around the expansionary level of 50. Market is expecting a slight improvement from previous month of 51.6. So for this for month of May, they're expecting a slight improvement to 52 over here. And market will be paying close attention to the services prices paid, which is the subcomponent of the services PMI. So that would indicate the cost of doing business in the services industry as a whole in the US. So it has been rising pretty much steadily since the start of this year. Market, the forecast from trading economy is expecting it to dip to inch up slightly higher from 65 to 65.7 from 65.1 that was printed in the previous month of April. Then thereafter at 10:30 p.m. we have the BOC press conference, which could potentially impact the dollar CAD and the CAD crosses. And we have the weekly stockpile EIA, that we call it the energy US Energy Agency EIA weekly crude oil stockpile change at 10:30 p.m. that could also have some impact on the West Texas crude oil on the crude oil prices on the intraday basis. And what we have over here is that another Federal Reserve official speaking at 1 a.m. Fed Cook. Then thereafter will be a quiet session over here. So with that, before we go on to highlight some key Japan data to watch out for at the start of early Asia session tomorrow, 7:30 a.m. So this is considered as wages, the wages paid, overall cash earnings for employees year on year. So markets expecting a continuous increase to 2.6% year on year from 2.36% printed in the month of March. So if average cash earnings continues to show improvement in Japan, that could also potentially lead to more confidence by BOJ to continue maintain its so-called gentle normalization increase of its benchmark interest rate policy. So that could also potentially impact the dollar yen movement upon the release of this result at 7:30, upon the release of this data at 7:30 a.m., which is the average Japanese cash earnings, which is considered as wages, 7:30 a.m. in tomorrow early Asia session, Thursday, 5th of June. So that's before the start of our daily dose at 11 a.m. So with that sum up today's daily dose of market insights. I'm Kelvin here signing off. I wish you a great day ahead and we shall speak again tomorrow. Thank you.